Should we buy or sell the banned protocol crypto? First off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So the last time I looked at it was on the 3rd of April 2022. Bulls are goading bears. Here is the website, a secure, scalable, blockchain-agnostic, decentralized oracle. Band Protocol is a cross-chain data oracle platform that aggregates and connects real-world data and APIs to smart contracts. So here is the chart, weekly data points, big picture. We have fallen down to a very important level. We are testing major support. We simply cannot lose this level. You can see that the last months we are just testing this floor. The problem is that the bulls are not able to trigger a real rally. So you have this battle now between the bulls and the bears, and it will eventually come to some resolution. Looking here at the daily data points, you can see that the bulls recently made a lot of progress. They were able to reclaim this blue 100-day moving average temporarily, because the bears came back here to break us below it, and in that swoop we lost all the moving averages. So the bulls just completely lost confidence. So this is just not a good setup. We only have a horizontal support now. Everything else just went out the window. If you look here at the RSI and the PPOs, yeah, it's just very messy. When we go here to the daily data points, we are close to an RSI level that has a bit of a tendency to be bought, but that usually is actually the clear low end of RSI. We are not there yet. The same thing with the PPOs. We just don't have that classic RSI support that will inspire the bulls. So we are just stuck now with horizontal support, and that means that the bears have made a lot more progress than the bulls. So in my notes, I write horizontal support, but the bulls only get 2 on the technicals because they simply have lost too much too fast. Yeah, so the bulls are basically just hanging off the edge of a cliff. When it comes to seasonality, we don't have enough data to get anything to the right. To the left, we do see that September is the weakest of all months. We are not yet done with August, so August, it does have a bit of a tendency to show some sizable strength. But when the following month is the weakest, it means that it's going to be difficult to really embolden the bulls to put on like a big trade, because this is really not good seasonality. The January to March, April period, that's like strong seasonality. That's the stuff that will really make the bulls build a position. But why would you build a position ahead of such a weak seasonality? So I give the bears a -4 here on the seasonality. I give the bulls some benefit given that we are not yet done with August, but right after August, it really is not good. On the other hand, we don't really have that much data on seasonality for band protocol, hence, when you only have 3 years of data, you can't really jump to conclusions. I will skip over these like fundamentals because we don't really have any fundamentals for cryptos that are predictive of future price action. So here is relative performance, weekly data points, and we get nothing. To get correlations, we need to go to the dailies, and we have 85% positive with S&P 500, 95% with Bitcoin, 82% actually with gold, and -63% with the 10-year yield. So what happens with Bitcoin is going to have a pretty big effect on band protocol. So here we have the weeklies. So the red 200-week moving average being such a big deal, the bulls were able to get above it. So 3 weeks in a row, we were above that moving average, but then we lost it in a bit of an ugly way here. So that's very unfortunate. Doesn't seem like there's a bunch of bulls waiting to buy above that level. So this is a weak setup for Bitcoin. Looking at the dailies, yeah, you can see here, let me just draw it in. The blue 100-day moving average, it's been very good as a short level on Bitcoin, just too easy for the bears. And yeah, they came back at it again. And those who shorted that resistance level, let's just measure. Yeah, I mean, we're talking about, a pretty quick, a 17-ish% gain. And currently, Bitcoin has lost all moving average support levels. Let's look at, RSI and PPO. I mean, the previous time we had these RSI levels, it formed major lows. So that's, sort of like the glass half, full case. But this chart is just very messy. It's just, it's too much of a battleground where you have two strong players. You have the bulls and the bears. And when you have, these support levels sliced and diced like this, it can lead to a lot of frustrating trades. Here is a banned protocol against Bitcoin, and we don't really get enough data to do some calculations. Here we have the dailies. Yeah, we just don't have enough data. Here we have the seasonality between Bitcoin and the dollar index. And we do see actually that over the last 5, 7, and 10 years, Bitcoin usually outperform the dollar into the 1st of September. I give the bears a -3 here on relative performance. The damage that was recently done to Bitcoin, it's a pretty big deal for brand protocol. So we end up with a -1.7 in favor of the bears. The key signal is nonetheless horizontal support, but in this context, it's a pretty weak horizontal support. It could work out for the bulls, but it's more likely now that the bears will try to break that support level, and there's a risk that the bulls will start to get very squirmy at support and might, limit their exposure. So yeah, this is just weak. So we do have some time left, so let's run through some other cryptocurrencies. So here you have Ethereum. We have seen weakness here as well. Yeah, if we go here to the weeklies, we can see that this purple 20-week moving average, it's been pretty easy to short. And that's where you got that surgical resistance that week, early August, and the bears are making progress. Ethereum is still above the red 200-week moving average, so it is relatively stronger than Bitcoin, but not really strong in like some ultimate sense. Let's look at Cardano / the US dollar. Here again, we have that 200-week moving average in red. It's been a huge deal now as a resistance level. Major. Then again, we haven't seen the bears really create a panic sell-off. So we have a bit of a floor around here, then we have a ceiling, so a horizontal floor, a moving average ceiling. So it's a bit of a tug and pull, but ideally you would want to see the bulls make some more clear progress instead of just protecting a support level, that horizontal level. Here is Chainlink against the US dollar. Yeah, so the purple 20-week moving average is a clear resistance level here as well. You also have this blue 100-day moving average, which has been used by the bears, and we are now below that one again. So let's look at where RSI got when we were above. Yeah, so you see that in RSI it pushed into this higher end of the territory, which has triggered, pullbacks. Like if you go back here as well, that RSI level is very shortable. If we go further back, like here, that upper end of RSI just very easy to short. So it becomes too attractive for the bearish, and you will even have, bulls who will just limit their positions or even get out of their positions just to short, because this is just too easy. And yeah, the more, yeah, so it's too easy basically for the bears to recruit. Then again, we haven't seen a major breakdown yet below that horizontal-ish support level, but in this case, it's a bit more messy, horizontal support. Here is IOTA slash the US dollar. In this case, we do have a story of horizontal support, 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 support. So for most of the time, we have actually been above the current level. So it is like instinctually attractive to the bulls. If I was a bear, I would feel more uneasy about shorting at this level, because I would just look at the historical data and be like, well, if the bulls really were to go against me, it could get very dangerous pretty fast. Like if you imagine being short here, all of a sudden 45%, well 46, and up to this point you would have like 770%. Obviously, you wouldn't want to be part of a 770% short squeeze. Yeah, but the thing is that it's an interesting bullish opportunity. Then again, it's not really that bullish either, because the most recent rally where we reclaimed a bunch of resistance levels, like this blue 100-day moving average, we weren't able to stay above that level. We just lost that level and all of the other moving averages. Here is Polka Dot. Yeah, here again we are testing a super key support level. The bulls really, really, really need to keep to buy in a big way, because this red candlestick, it just eliminated like 3 to 4 weeks of progress in like one candle. Looking at the dailies, here again, that blue 100-day moving average, it keeps coming back. We tried to use this to form support at that moving average, but the bears had a lot of good history shorting, and now we are below that moving average and all the others. So there's a bit of a repeating pattern here. We are testing a bunch of long-term support levels on these cryptos. The problem is the context. We recently tried to get above a bunch of resistance levels, and then all of a sudden just lost confidence. So psychologically, the bulls are in a very vulnerable context to test horizontal support. It's in one of those situations where, unless we get some assertive buying soon, we could get real panic selling. So this is very, very much a big deal for the cryptos. Here is a Lisk. The same story keeps repeating itself. In this case, we are testing a super major support level that goes all the way back here to 2018. We usually see that this level attracts bulls. So instinctually, the bull in me look at this and be like, well, this is interesting. But when we go here to the dailies, we do see that not that many days ago, the bulls were way above the current level, but then all of a sudden they lost confidence. Why didn't they attract more bulls? So yeah, basically we have a very, very dire situation in the crypto landscape, especially, of course, if you are a bull. If you want this megatrend to succeed, you definitely need to call all the fellow bulls out there and encourage them to get into it ASAP, because we really cannot get a breakdown at these levels. And no, we do not really need a flush to shake out the weak hands. That isn't how bull markets work. Bull markets are higher highs and higher lows, increasing confidence, increasing bullishness, not bearishness. And that's just basic logic. We need bulls, strong bulls, to have a bull market, not a major flushing bear. Like if you have a broken leg, the sign that you are going to heal is not that it falls off.